Okay, good morning everybody. So we've had the long weekend and now we can get back to trading. I think traders are one of the only groups of people who get annoyed when we have bank holidays. So what I'm going to start doing also is in your morning emails I'll lay out all the zones rather than me taking you through them all in the video, because the shorter the videos are, the quicker I can get them uploaded and get them out to you. In the emails, key zones, those are the ones that I will be watching and interested in trading off of. Strong zones, they're still good zones, they're still zones that fit all my rules, but they're just the ones that I will be avoiding. Purely, I only like to take the highest probability trades, as I'm sure you all know by now. So, we've pushed up and we've pulled back now, as expected. We can see we've came down into the 6220 level. Really, this is still key for the market now. This 6220 level down here, as long as the market still keeps respecting this area, we can buy down here. 6240 also is very good. And then we have our areas that we've went over multiple times above. Now, if we just look at this on the 4-hour time frame. So, the 6220 level, we know this from when we were in this range. It was the area that we got lots of good sell positions from as the market came up to it each time. So it stands to reason it will be good for buy positions. If the market does start breaking through here and coming through here, then realistically the market is going to come back down into the bottom of the range at the 6120 level. As always, guys, when I'm telling you these things, it's not necessarily going to happen in one day. And in fact, it's almost guaranteed not to happen in one day. I'm just giving you a longer term outlook of what the market is telling us. Up above, we have still our strong zones. Really, up here, very good, 6395. We can also see R3 is tying in with this swing high here on the 4-hour time frame. Now, this is also creating a head and shoulders. So your shoulder, your head, your shoulder. Very common pattern that you see before the market reverses. So it's giving another little bit of weight to our negative bias. However, as long as the market is holding above 6220, I'm more than happy to keep buying into this market. We have had the holiday, guys, so at the open, expect a fair bit of chop. We had the American markets, which were open yesterday. They've thrown the FTSE around somewhat. So this morning, when the London Stock Exchange opens, it will be quite choppy. The only zones to go over really today are these two here, because they're very close together: 6266, 6268.7, 6273.8 to 6275. Only thing I'm going to be doing with these is I will not be trading. I won't buy here into here. I won't sell here into here. The only time I'll be interested in these zones is if the market comes up, and then I'd be looking for sells, or if the market comes down, and then I'd be looking for buys. Okay, guys, I'll put it all in your email. There's no real news today either, and the only thing really is we're watching the open because it's most likely going to jump around quite a bit. Okay, so I'm into a trade, which is a trade that I call a spring bounce trade. Basically, usually I like to let these trades run, but really for me today, we have key resistance support, at 6241.9. It's a very strong level, so likely if this market comes down into this sort of 6244 levels, I'll probably just come out of it, to be honest. We've had a long holiday, an extra day's holiday over the weekend. We had the Monday off, so it's good to just be a little bit more cautious in early morning trading. And what we did here is, just before the open, the market actually rocketed up at 7:55, poked up a little bit more at the 8 o'clock open, and then rejected instantly. It's why it's important not to get sucked into the market. I find that a lot of people who watch charts, when they see a strong move like this, they automatically think, oh, this market's going to explode upwards, I really want to get in on this move. They'll end up jumping in right at the end, up here somewhere. The market pops up, turns around and collapses back down, and they take a loss. The market moves in ways that it tricks people a lot of the time. It's much better to just have your set of rules, follow your set of rules. If you have rules that give you an edge, that's what allows you to be a profitable trader. Trying to guess market sentiment is, it's a surefire way to blow your account. I'm in this trade. It's a trade that I take all the time, so I know that it has a high probability chance of completing. And if it doesn't complete and stops me out, I know it's just part of that trade, part of the probabilities of that trade. It's a lot easier to deal with losses when you know it's part of your trading plan. Just quickly, what I'll touch on, guys, whilst this trade is running. I've recently deleted the subscription service for non-members. I did it over the weekend. The reason for that purely is because I think I can give a better service to the people who have done the trading course. People coming in who haven't done the trading course, it's a lot more difficult for me to be happy with the material I'm giving out to them. People who have done the trading course, I know they have a trading plan, and I'm much happier to send them out the videos and the updates and let them get on with it themselves. And people who haven't done the trading plan, to be honest, I don't think the service that I offer with the subscription is worthwhile for them. So I'd rather just, not have people sign up for it, not charge people for it. So I have stopped that. And people who have taken the training course, also, if you've not signed up for the subscription service and you want to see what it's about, if you log into the subscription service now, I've set it up so you can get 7 days free. Even if you just take the 7 days and then cancel, it's absolutely fine. I think it's beneficial if you can see what I'm doing each morning and how I'm setting up each morning. Okay, so it's 20 to 5, the FTSE is now closed. First thing we can see is we had a very strong down day. Came down and crashed right through the 6220 levels. There was actually very little support there. The sell-off that came in was very strong. Now, our evidence for that today was we identified the head and shoulders pattern, which suggested negative sentiment. On the daily time frame also, once the market got up into this key resistance area, we were expecting the market to sell off somewhat. If we just jump back onto the 4-hour time frame quickly, we can actually see the sell-off in the morning was absolutely enormous. Crashed down very, very strongly. Really, most of the action today happened in the opening hour. You can see the market just peeled off. Very little support here, very little support here, and it just kept coming through. For me, after the morning session, there was really not a lot to do. The market came down into the key daily level at 6165. This is where it bounced from after making a double bottom. But for me, This level didn't align with the rest of my rules today, so it wasn't somewhere I was willing to trade off of. I was looking for the market to pull back into the 6215 to the 6220 levels. It would have been a great area to look for shorts, but the market doesn't do what you want it to do, and the market does what the market does. So after the morning trade, I didn't really have any other trades. Well, I didn't have any other trades. This does happen in trading. It's important to remember that there are going to be days where you have no trades. The important thing is not to jump into the market, not to take trades that don't fit with your rules because of frustration, boredom. You only want to take the perfect trades, the ones that align with all of your rules. So moving forward now, we've broke through the 6220 level very strongly. Want to see if the market remains below here. If it does, really looking for the market to come down into 6120, which has been key support for a number of weeks during this range. Okay guys, so I will leave the website address on the screen as always. Apart from that, I'm James Orr, and thank you.